money wise. Let's go.
Woke up feeling like a boss today. They said, boy, you know we got you, gone and do your thing.
Hey, everybody, this is Mike Hoffman with the Longhorn Way podcast, and I'm very excited today. We're going to have a special guest, the founder, CEO, head honcho of Richer Values, Rodney Mullen. Rodney, thanks for being with us today. I just want to start with a little background, right? Like Rodney, who you are, because I was noticing, you know, you got some really cool background stuff here. It looks like an NBA basketball, golfer, baseball. You're blocking the mini golf club / shofar that we were talking about. There it is. There it is. You got some really cool stuff. So tell us about yourself a little bit, Rodney. Where'd you grow up? Where'd you go to school? Married, kids? Where do you live now?
Right. So I grew up in Phoenix, Arizona. That's where I live today, Phoenix, Scottsdale area.
Yes. Listen, I'm a Tucson guy. I was born and raised in Tucson, Arizona. Yeah, I forgot.
Right. Love it.
Yep.
Okay, good. So you'll see there's I've got a Tucson stint in there, non-college, which is normally it's a college stint there. But so grew up out here, and went to high school out here, went to undergrad and graduate school in Los Angeles, UCLA in economics. Combined both degrees, and graduated, went on. Go to the story later, but now also lived out there for about 11 years. Met my wife at the end of school.
Nice.
Dated, got married a few years later. Today, thank God, we have 5 kids. After our first,
Whoa, hold on. Let's not gloss over that. How many kids?
5 kids.
5 kids. All right. How old are they?
Our oldest is about to turn next week 19.
Mazel
Our
tov.
youngest is 8. He'll turn 9.
Oh my God. You have between 19 and 8. Okay. You're a busy man. You're a busy man.
Yeah.
Okay.
No, it's awesome. And so after we had our oldest daughter, I'd already been doing deals and stuff like that in real estate in LA and in Arizona, and kind of going back and forth. And my wife, I liked LA. My wife, even though she's from there, definitely did not want to live there long term. It took all of like one time. Baby's maybe like 3 months old. She goes to the grocery store like 2 in the afternoon, like 2 miles away, goes to come home on the freeway.
Oh no.
Stuck in traffic.
Oh no.
And when you're in LA and you're in the middle of off ramps, so you got nowhere to go.
You're stuck.
Because your next off ramp is way up there, and the other off ramp, you're past it. Now in your parking lot. So she's there, parked. Baby's crying in the back, has got a nurse and whatever. And she calls me. She's like, okay, we got to move. So
That's how it happened? Like literally that? She was like, I'm done. I'm out of LA.
I can't do this anymore.
Oh my gosh. Oh my gosh. All right. So did you come back to Phoenix?
So came back to Phoenix, was here for about 1.5 years till that, market cliff.
Yeah.
Because I was in real estate. I had divested of a couple projects that I was working on. One very successfully, one, took a little bit of a loss to kind of withdraw before the crash hit, just because.
Well, let's go back. Let's go back to LA real quick. What were you doing in LA in real estate?
Well, so actually out of college and grad school, I first went into business consulting at a really phenomenal firm. At the time, it was called Simpson Consulting. Now they've been acquired, part of something else, but phenomenal experience. This is back in like 2001, and everything to do with human capital. And so we would consult for Fortune 50 all the way down to small cap entrepreneurial companies, multi-billion-dollar companies. Everything to do with how to manage your human capital, how to build the right culture, how to build the right reward system, how to do performance management and measure people's performance and give feedback and how to really manage the whole business from a human standpoint, have a human element, not the corporate side. And this And in '01, that was not really a thing.
You're ahead of your time. You guys are ahead of
We were
your
ahead of its time. It was an awesome firm, and they also breathed it from within. So I was there about 6 years. It was fantastic.
Well, hold on. Let me.
Um,
Can I ask you a question on that? Because I'm curious. So they hire a young man who is graduated college and got your MBA or something like that.
the master's in economics and MA,
Master's in economics. All right. So you're like 25 years old, right?
23.
23. All right. You're 23 years old and you get hired by this company, work on human capital. What is a 23-year-old? What do you do? Because what do you got? How do you know about, to me, human capital is, we don't learn this till we kind of make a bunch of mistakes and figure some stuff out. So what did a 23-year-old, what were you doing for this company? Because it sounds you guys were 20 years ahead of your time. Because you guys,
Yeah.
that company would be killing it right now, and they probably are.
Yeah. So there's a, phenomenal structure. I mean, even though they led a very quote unquote flat organization where they weren't, authoritarian.
Yeah.
You got your partners and your senior consultants and associates are the four main levels. And so it's all about kind of knowledge transfer all the way down. And so in early projects, when you first come on, look, you're doing a lot of the analysis and stuff like that because there's a ton of stuff. Like when companies want to design equity plans or stock option plans, or how are we going to do this bonus plan, or we got to rethink our sales compensation strategy and how are we going to incentivize the right people for the right result and not, have them, is all these factors. Or, oh, now there's this other company and the management wants to buy out the shareholders, and how do you structure that? And so all kinds of things come into play.
Yeah.
And a lot of it at the bottom, it starts with like analysis and financial modeling and all this stuff. And so early on, when they started to see my quantitative abilities, it was like every time any of the partners wound up, because they're pitching all the time and networking and talking to all these companies, and then when they land projects, and you'd wind up working on, which was also ahead of its time. Normally, consultant, they just ship you to the one company, and you're there for 8 months or whatever, and half the time, like, you're just sitting there twiddling your thumbs, waiting for the client to get you something, whatever. We didn't do that. We worked in our office, so you could work on 3, 4, 5, 6 projects at once and manage your time and hit all of them, which was awesome. Like, way better learning experience. So whenever they would land some like really hard projects that had big financial modeling, whatever, they're like, get Rodney.
All right.
And so but it was free market. They didn't tell you which project, you get to choose. They pitch to you. It's a free market system. And you're like, okay, yeah, that actually sounds really interesting to me. I'll take that one. I know I don't have time for that one or whatever. So it was super interesting, right?
Wow.
It was kind of democratic in that way. So early on, you learn a ton of financial modeling, a ton of analysis, and then also how to write decks, how to take these complexities of all the numbers and how to synthesize it down, where now, okay, you've got 15 minutes to sit with the board and the CEO and the CFO and present 6 slides that represent like 4 months of analysis and go.
Yeah.
And so writing those decks and creating the charts and like boiling it down to the simplicity, as my Rabbi Shushan always says, I forget who he's quoting, simplicity after complexity, right?
Yeah.
There's an art and a talent to that. And so we learned a ton of skills through that experience. And so that's what I was really doing in LA first.
Yeah. That sounds great.
And after a while, just my entrepreneurial drives or whatever, just felt that, okay, it's time to start doing something on my own and see what other paths there are.
All right. So, okay. Because this is a great background. I mean, that's probably a great background for anything you want to go do. But you obviously saw after a while, you're like, I don't want to be consulting. I want to be the doing. Right. All right. So then what'd you do? Because that ain't real estate, right? There was no real estate going on there. Right. But
Yeah,
super interesting.
Transition was super interesting. So at this point, I was already married. We hadn't had kids yet. We were maybe 6 months married, something like that. and went to a friend's wedding, and a friend of him and his newly married wife, they were gonna, picking up and moving to Israel for like a year or 2 years or something like that.
Okay.
And my wife and I kind of look at each other and we're like, that sounds pretty cool. Like maybe we should do that. And we weren't going to go for 2 years. My brother was graduating college like 6 months later. And so we're like, yeah, we could throw our stuff in storage and just go and try to learn Hebrew and just live there and put our jobs on hold and go. So we did. We made plans super quickly. We threw everything in storage, found an apartment over there, like lived in Jerusalem, did what's called Ulpan, like language immersion for 6 months, and just lived there. And it was awesome. But I told myself, again, this is just the type of person that I am. Like I told myself, okay, well, I'm not going to go. Like I can't just do this and put my career on hold and whatever, unless like I have a plan, unless I tell myself that while I'm there, I have to figure out a business plan for when I come back.
Okay. So
That was my condition
you're
to myself.
so you're studying Hebrew and you're developing your own business plan. So when you come back,
Yeah.
you got something. Now, when you were in Jerusalem, no job, just you're studying Torah.
I wish I was studying Torah.
You
It
weren't
wasn't
stu-
even like on my radar at that point.
Okay.
We were just studying Hebrew,
Just the language.
just the language.
You just wanted to speak the language.
A little bit, a couple of class here or there, whatever. But like, I grew up not religious. I mean, we were on a path at that point, but we're a lot more knowledgeable and observant today than at that time.
Well, okay? So I'm Jewish too, so we can discuss this. For you non-Jews, I'm sorry, but you grew up Reform, conservative, or
Yeah, Reform.
you grew up Reform? And what about your wife?
She grew up conservative.
She grew up conservative. Do you know Likkei Hebrew? Did you go to Hebrew school as a kid?
I did go to Hebrew school. I mean, I didn't really know much at all.
So you could maybe read it, but you had no idea what you were saying, correct?
No idea what I was saying.
Okay. And you guys decide at a wedding, when you listen to some of your friends to go to Israel, like you said, this sounds like a good idea. We want to learn Hebrew.
Yeah, and I'd already taken, actually, I wound up taking a year of Hebrew in college at UCLA.
Now, why? So, okay, hold on. I'm going to I have a question. Why did you take Hebrew in college? Because if your Hebrew was like my Hebrew growing up, you didn't know
I didn't know anything.
nothing. So why did you take Hebrew?
So it's so funny.
Somebody said it was an easy A.
Combined program that really the school doesn't really market, advertise, or whatever, and found it and crafted this program to be able to do an undergrad and then a graduate degree in 5 years. And a graduate degree in economics is really doing PhD track, but just doing about half to or so of the coursework and not doing a dissertation, just doing a thesis.
Okay.
Smaller program. But to do that, there was a tremendous amount of prereqs to just be eligible to apply for that graduate program. Even though I'm not majoring in math and this or that, like you had to take an insane amount of classes to where like I had no free classes for my entire first 3 years. Everything was like, okay, well, what do I got to do to get my major? And what do I got to do to have all of my stuff knocked off so that I'm eligible to apply in my 3rd year for acceptance in the 4th year so I can join PhD classes as a 4th year of college. So it was so funny because thank God I did that and passed. I was doing well and got admitted. And I go to sit with like the counselor at the beginning of the 4th year to like figure out, okay, what do I got to do now? And they're like, well, now you're done. Well, what do you mean I'm done? Like, well, you satisfied all your requirements, and now you're accepted the program. And so here's the class you have to take for the program, and here's the remaining classes you have to take for your major. And I was and that wasn't a full schedule. And I was like, what do I do for the other class? You can take anything.
Electives. You get electives now.
Yeah. And I didn't even know, like, that was like,
You didn't know what an elective was. Yeah.
I could take cooking.
Yeah.
And they're like, yeah. I'm like, and that would count? Like, yeah. Like, okay, well, what do you got? And then I'm like, so I'm looking through like the list. And like, so I was like, oh, Hebrew, that sounds pretty cool. Like, I don't really know any of it. So I'll take Hebrew. And it meets every day, whereas most college classes meet like a couple times a week. Met every day. I took it for the whole year. And I remember showing up like the first day, and maybe half the kids were Jewish, maybe a little more, whatever, and some were not Jewish. They didn't know the Hebrew letters yet. And I thought to myself, I was like, oh, it's going to be so advanced, so much, by 1 week they're caught up to what I knew.
Oh my God. Oh my God. So you didn't take the class. You thought it was interesting. Like you didn't hear it was an easy A or something like this to add to your credits. Because the real reason I asked that is my son, who is 19 and is going to be a sophomore at the University of Texas, comes home and tells me, yeah, you know what he tells me he's going to take? So this is a kid, we grew up in Texas, right? He grew up in Dallas. I said, just take Spanish. I go, I just want you to learn Spanish. It's going to help you later on if you can speak the language. Huge deal. He decides to take, they make him take Spanish like in middle school, and he gets to high school and says he's going to take Latin. Okay. So he decides to take Latin, and to my chagrin, right, I'm like, Latin, dead language. I get it's the root of language, but dead language. Anyway, does that. He's in economics. He's going to be an economics major. Do you know what language he decided to take? He's going to take next year? Yiddish. They have a Yiddish.
It's a course.
They have a Yiddish class. The reason he's taking it, 5 hours. You get 5-hour credit, or even 6. It's not a 3-hour class, because I think it sounds like what you're saying.
Probably meet every day for an hour.
They meet every day for an hour, right?
Yeah.
And so he wants to learn Yiddish, and I'm like, you got to be kidding me. Now, you know who's excited? His bubby. My mother speaks Yiddish, right? So she's excited to see you. So I didn't know if you were taking Hebrew kind of on that class, but you decided you got some free time. You're going to take a little Hebrew. And quickly learned that your Reformed upbringing, where you went to temple once a week and maybe Sunday school, didn't really prepare you for Hebrew class in college, right?
It got me through the first week. Yeah.
Yeah.
But it was great. And then, so I did it for the whole year, learned a ton, just gave me a huge base. And then that summer, which is before I met my wife, I went to Israel for the summer and took an ulpan that year. So I then already did 8 weeks or whatever of language immersion then, loved it. So I was
okay.
conversational at that point. So then later, when the idea of Israel came around, it was like, oh, I would do that again. Like, that sounds pretty good.
Now, was your wife as advanced? Has she already done like an 8? Oh, so she was a little behind.
And we showed up because I don't remember what it was. We couldn't get there. We went in like very early January, and the programs had started like a week before or something like that. And there was this new a program that had started up like a year or so before that was really great for new immigrants that needed faster immersion, because a lot of the regular immersion courses, even though they pack it in, they give you like a huge academic foundation to build on so you can really excel, but it takes a couple years to get there. And this one is meant for like faster immersion. So it skips around a lot, but gets you more functional more quickly. Yeah. So she was going to take that one. And so we went to meet with the program, because they're like, I'm not sure we can accept you. We've already started like a week ago. So we go and we sit down, and we're meeting like with the administrators of the school, and they're like, okay, well, they're already doing this, this, and this. Like, do you know that? And I was like, oh yeah, she knows that. And my wife's like, yeah, we're good. And then we leave, and she's like, what are you doing? I don't know that stuff. They're going to figure that out in a day. I'm like, come on. we're going to a coffee shop. I'm gonna teach you what they said you need to know. And she is not such a language person.
Oh, wow.
So she was not so happy with that. I think today she thanks me, but it took maybe 10 years for her to like actually thank me
Oh,
because she was not so happy with like me like throwing her in.
yeah. I can see that. I can see that. All right. So you're
I also
immersing,
took Afro-Cuban music was one of the other electives that I
and
took.
you didn't want to go to Africa or Cuba and immerse yourself in
I
music?
did, but I didn't do it.
You didn't do that. All right.
But that was cool.
All right. So I love this. You're in Jerusalem. Your wife is totally pissed off at you because you're having to do this stuff, and she's like, "I don't know this," and you're like, "Ah, you'll learn. You'll be fine." But you're really secretly writing your business plan. Like, what are you going to do? And so I'm fascinated. Tell us, what was the business plan?
So the business plan wound up being to go back to LA and see LA is a super interesting real estate market. There's just constant growth in demand and therefore there's a ton of infill redevelopment on an ongoing basis.
Yep.
And so the plan was to go back and start, hunting for deals and raising capital per deal to work on infill residential, to buy certain properties, whatever those may be, and rezone them, get entitlements, and sell them off after they're permitted to a developer that's going to handle the construction and get that lift in value because you've created the value by bringing this project to market.
Yeah.
And so you're doing the design, the entitlement. Like, I don't like simple things. My mind is like always working, and so like to get something that now is super complicated is like more of my style. And so infill's super tough. It's not like a fix and flip, or it's not like, a rental. You got to go in there and figure out, okay, how much land? What about the zoning? What do I think I'm going to get? How many units is that? What's going to be my cost per unit? What kind of units does this market need? Does this market not need? What price point? Where is that going? And so there's like a gazillion factors to try to figure out like what makes her a good project. And then what about the general map and where are right areas to look for projects? So it's like this huge puzzle. So it's like, this sounds awesome. But it took me a while to like, put that plan together. And a close friend of mine, actually my wife's best friend, her husband, was in infill. He would do the developments from ground up, but would also sell some projects off. And so I got a lot of, insight and guidance from him on how to do that and where to look. And so then that was the business plan, is to come back, basically be like a one-man shop, to have to go and, do the architecturals and the zoning and get your soils and the design and raise capital to it and buy the properties or get options on them or whatever that is and to try to put those deals together.
And this does not sound like a one-person job. This sounds far more complicated. And I know you said you like complicated, but like this seems like a lot of work. And
A lot of work.
and no guarantee, right? Like, I mean, it could work, but like, what if no one wants to buy your product? No one wants to develop? I mean, then are you stuck having to do it yourself? Were you going to do that if you had to?
Yeah. So that was a backfall if we couldn't sell the project, or like the project we got stuck with when the market tanked in 08.
Yeah. Good timing.
We had to, pull out without even getting the zoning, but because the cities were just a pain and couldn't even get the entitlement. So, I mean, look, we had to take a loss, and investors had to put in more capital, just hold the property and then still take a loss from that. But they're all big boys and they treated me with the utmost respect, all but one of them. They understood, look, there's risk in every project, and I didn't hide the risk, like we talked about it. It's like, okay, look, all these 15 things could go wrong, but here's the upside, and are you in?
Right. Well, I mean, this is interesting, right? Didn't know we were going to go down this path, but sometimes it seems like people think that these real estate deals, they forget there's downside. There's no guarantee you're going to be successful with these things. I mean, you don't promise. I'm sure you weren't offering a 4 or 5% return on your investors' money, right? You're offering them this higher return, but there's risk. There's no guarantee you're going to get there. Like you said, there's these 15 factors that all got to hit. And what year was this when you started doing this?
05.
Okay. So you start in 05, things seem pretty good, but then you're into this for a couple of years and there's this whole financial real estate crisis that has nothing to do with you or what you're trying to do. And now that's probably not even one of the 15 factors that you presented to your investors, because who would have thought that, there's these things called mortgages that become collateralized debt obligations that people are chopping up and gambling on and insuring and doing all this other stuff that could really affect
and the whole financial world implodes. Yeah, that probably wasn't in my prospectus.
That was one of the factors in the PPM that hey, just FYI, also this could happen. The financial world could just turn on its head. Wow. Okay. So all right, 2008 happens. Does this mean that this business plan, this idea has got to be put on the shelf, or what?
Yeah. So
what happened?
So, we had successfully gone through several projects, both in LA and in Arizona. That's where I started doing deals in both areas. My brother actually, who went to U of A, was in real estate here. And so I would come back and do deals with him here as well. He was on the brokerage side helping me find it, et cetera. And then I would do the same kind of thing, the entitlement, the zoning, and whatever. So had some good deals here and there. But then still had some deals. So as I said, there was one deal, like it was going to be a great deal, but I exited in 07 before, and even forfeited some escrow money, because I could just tell that, something wasn't going to hold up. And it was not what I felt, because we're going to have to go from, let's say, like a $200,000, current spend is where we were, to, okay, really getting into the project and spending a lot more. And I pulled out, and my investors took a little bit of a loss, maybe like a 10% or whatever. And, not that I knew the extent of what was about to happen. So, but I eked out of there, but I still had, this project in LA that really went south. So then when it hit, was like, okay, well, what do I do now? But I was on the buy side, right, anyway, which is like hunting for deals, and it's a lot of deals.
A lot of deals.
So there was a guy that I knew down in Tucson who, was starting to kind of get into the REO space in November, right? As things were starting to tank, November 08.
November 8. Okay. Okay.
And said, why don't you come down here, grab a cup of coffee? Okay, cool. I didn't know I was going to be there for like 8 hours, interviewing him and the two other people he was starting to partner up with, who wanted to build this big shop to buy REO from banks around the country. So they had this big vision, but not necessarily the expertise on how to build it and scale it.
Okay.
And so with my background, especially in consulting and just knowing how to get things done and whatever, kind of pulled me in, and eventually became COO of the enterprise, and we built this huge investment company where we were buying foreclosed homes and then non-performing mortgages from banks all around the country, from the largest banks in the country down to small banks you probably never heard of. We were monitoring all, at that point, there were like 8,400 FDIC depository institutions, banks in the country. We're monitoring all of them and what their inventory levels were, their REO levels and this and that, and who could trade because maybe their capital levels, their reserve levels are down here. So once they take a hit, it would trigger the FDIC to come in and take them over. So, they would call us. Hey, can you help us with our REO? We look at their financials. I managed a sales team. I mean, I managed every aspect from the, acquisition sourcing to investment underwriting to REO asset management, help build. We wound up building a mortgage servicing company out of Portland, Oregon to service all of our mortgages so we could do it on a higher touch basis. And I managed the software development team. So we were developing all our own software to do all this. And so I would train my sales team where we'd get incoming calls from like different banks, whatever, and they'd pull it up. And in 30 seconds, you get the president of the bank on the phone who's like asking for help. And you look and you're like, this guy can't trade. This is just going to be a waste of 4 months because he's not going to be able to take a loss or his bank's going to go under. And so, I'm sorry, we can't help you versus, this one could trade. So super interesting.
Wow.
I always lead with analytics, right? Analytics really help uncover, a lot of really important aspects of any deal, of any potential. So that's how we would kind of DI.
Excuse me. That's crazy. That's crazy. So how long did you do that for?
And that's what brought me down to Tucson. So he said, come on down here. And he was in Tucson. So I went down and started working, with them like that next week. It was a startup at the time that like everything was crashing and we were coming in there to try to buy. So it was, insane around the clock hours. My second child was born like 6 weeks later. So I'd go down to Tucson on Monday morning at like 4:30 in the morning. And then I would come back like Friday and then be there with my wife for Shabbos, for Sabbath. And, I'd typically be working again Friday night or Saturday night and Sunday, and then go back Monday. So it's like this crazy time. But a couple weeks before he was born, at the end of December, my wife's like, okay, no more. You have to be here. So I was then home working from home, from December to February, and then commuting again. And then I was at the company for about 5 years.
Commuting the whole time?
No. So I started commuting again in maybe February.
Yeah.
And by June, I was like, okay. And I was really commuting because I wasn't really sure, like, was this going to go somewhere? Was it going to be stable? You never know. And so then when it was like, okay, yes, this is going to be my next phase, you guys got to come down here. So then we looked for a place, and got a place.
So you moved to Tucson?
And so we moved to Tucson. So we were in Tucson for 6 years.
Oh, nice. Where did you live in Tucson? What part of town? I'm just curious.
So we were like a little bit below the foothills, like right off Swan and Camp Lowell, like right by River Road.
Yeah. I grew up off Cloud Road. River and Cloud Road, Tanque Verde off Cloud Road. Yeah.
Nice.
Yeah. So your kids grew up 6 years there. You had some kids, where did they go to elementary school?
So 2 of my kids were born there. My older 2 had already been born. We moved down there. One was 6 months old and the other was like 3. So when we left, so my oldest daughter, she was going to THA, Tucson Hebrew Academy.
Yeah.
And my son was just in kindergarten, and there was a kindergarten and preschool at Anshe Israel, which was,
That's where I went. That's where my bar mitzvah was. I knew we were gonna get there. Oh my God, that's great. I didn't know that. Know that. Rabbi Oleski, I don't think, was he there when you were there? He wasn't there when you were there.
No, we had there was a different rabbi there, Rabbi Eisen.
Okay.
He was great. And now he actually lives up here in Scottsdale and comes to, like, there's, couple of things that I do at the shul here. And there's this like halacha class, that meets like once a week, like Jewish law, and he comes.
That's really cool. That's really
Yeah.
cool. So this is fascinating. So you did this for 5 or 6 years. You guys were buying REOs. It must have been felt like the wild, wild west though, because you guys, I mean, people were probably super excited that you were coming to talk to them about buying REOs. And then were you buying all over the country? Like
Yeah, it
everywhere?
was crazy because oftentimes, if you wanted a deal, you had to buy
Oh,
what they needed set off their books.
Yeah.
The good and the bad, or more like the bad and the worse.
Yeah. Yeah.
I mean, some of the earliest deals, there was some amazing stuff in there, but a lot of later deals, it was like, okay, whatever they wanted off their books, we just had to price it up.
So what were you pricing this stuff at then? Like if their mortgage, just make it super simple for everybody. If their mortgage is 200 grand, I know you're buying tons of deals, but let's just say one mortgage is 200 grand. What do you guys offer on this thing? I know it depends, but
Yeah.
what was the ballpark?
Okay, let's first leave mortgages out
Okay.
because it's more complicated. Just talk REO. They own these homes already.
They own the house. Okay.
Right.
So they own the house. Do they even tell you what the basis is, or they just say, go evaluate the house and make us an offer?
That's it.
Okay.
And you got to do it in 2 weeks. And this is before people would go around with cameras and computers in their pockets. There's no smartphones. They came out in 2010. This is 2008. How do you manage that, right? And how do we get enough information so that we can be super confident in our bid? And by the way, turn around and pitch to investors, because you think there was any Wall Street capital available to buy this stuff? Are you kidding me? We'd be on the phone to try to pitch to somebody. The second you say single family residential,
They're out.
click,
They're out.
hang up the phone. That was the toxic asset. Nobody would touch it.
Yes.
So we'd have to pitch to private individuals, doctors, lawyers, etc., to syndicate each pool.
Yeah.
So how do you get enough information to show to them and to be confident? And that's why the logistics, it was super fascinating to what we did, and we had an internal review team, whatever. But let's go back to your question. What were we bidding? Right?
Well, no, but I want to know, how did you even know what to bid? Yeah. How'd you gather the information? I want to know, because Richer Values didn't exist, right? I couldn't go just look out there and see what the asset was worth. Was Zillow a thing? Was Zillow?
Zillow was available,
Okay.
but
not accurate. Yeah, not accurate.
not that its numbers are much better today, but it certainly was not good then.
Right. So what'd you do? Did you send
So-
teams out on the ground? Did you go look at these properties?
It's a combination.
Yeah.
So, in the earliest deals, yeah, we had to fly our own people out to as many of these properties as we could.
Yeah.
Take a bunch of photos, maybe get inside. I didn't say that. We had to just figure out,
We did the same thing. Yeah.
what's going on with
Yeah.
each property.
Yeah.
And so that was the visual reconnaissance. Meanwhile, at every location, which sometimes stuff was totally out in the boonies, we would go and try to find 3 realtors for every property. So we'd have a team that was just pounding the phones to get realtors to come do CMAs and give us their opinions. And we would tell, but so many of the realtors, they're trained in what we always felt was the wrong way. Oh, well, I'm going to give you the search between this size range and this value band. Here's all the homes that sold from $300,000 to $400,000. I'm like, what are you talking about? Why are you predetermining your price point?
Yeah.
When nobody knows what's going to happen to these markets? You need to give me every comp of every size in the immediate area. And they're like, why would I do that? Just do that. This is what really, eventually years later, became our whole methodology for, how our systems work. But so we'd get a bunch of realtors that would then submit stuff and give their opinions. And also on the phone, we'd be rating the realtor. How much do we think they're full of hot air? How much do we think they know their stuff? Who are the right people to work with? And we were searching for rock star agents in all these areas so that if we win this deal, they're going to get the listing. So they would make good money, especially in areas where we'd wind up getting other deals and other properties. But we had to find the best agents that really knew what they were doing to tell us where do they think they could sell it for, knowing that in so many markets, things were falling 1, 2 to 3% a month.
Yeah.
And it might be a month before we close, and it's another month before we're ready to list it. And, all of a sudden, what you think is $400,000 is 10% less by the time you're there. And you got to sell for less than that because the buyer knows it's falling again. And so, this is this whole crazy thing of like, so where do you price that thing? And so we would typically then knock the haircuts down for the devaluation.
Right.
And then we buy at a percentage of that value.
Yeah.
So in early trades, that percentage you don't even want to know. But once the market stabilized about a year.
No, I want to know. Go back. I want to know.
Now, our earliest trades, we were buying some of those properties at like 25 cents.
Right. Now, so
Of off dollar.
I get it. Now, but this is what I want to, are you guys the early wholesalers? Are you guys the ones, and you turn around and try to sell it right away? Are you putting a tenant in there, renting it? Are you owner financing it? Or what is the exit strategy for you guys?
Honestly, the craziest thing, 98% of our transactions, we would sell to retail buyers.
Okay. So you would go back to your Rockstar Realtor, list it on the market. Here's the price. Boom, boom. Let's go. Now,
Yeah.
Who was buying? So end buyers were buying houses. Yeah. Who's giving them a loan?
I don't know.
I mean, that's the thing. Like,
maybe you were. I don't know.
It wasn't me. But here's the crazy part, right? Like, so when you think back to that time, there was tons of foreclosures going on, but the percentage of actually people that were defaulting on their loans, wasn't it like less than 15%? I mean, overall,
I have to go back and look. No, I mean, they was pretty high.
but 15% is really, really high, right? I mean, remember, this is owner-occupied properties. Well, they were supposedly
No, but there was a huge amount of what they would call strategic default of people that would finally just realize, like, oh my gosh, I'm so far underwater, I'm not even going to pay anymore.
They're done. But you were able to, look, you guys were, I guess not wholesaler is the right word, because they're trying to get her, you're trying to get her as fast as you can, but you're listening and you're trying to retail price, but you've got a strike price that you've already kind of baked in there and said, this is what we think the property's worth. You bought it a percentage under it, 25, 50, 60, whatever percent under, and then sold for the delta above.
Yeah.
That must have been a lot of fun.
And we would track it. So we would sell our properties typically about 98% of what we projected.
Pretty good. Pretty good. Yeah. I think most people would take that right now, right? Yeah. If they knew the ARV and they were going to hit 98%, I think they'd be pretty happy. Yeah. So this went on for you from 2008 till...
I was there till 2013 in that company.
So did life evolve? Like, did you guys end up selling to institutional buyers? Did you do bulk sales ever to institutional buyers, or was it mostly just to retail buyers for owner occupied?
Good question. So we might have sold a few REOs to institutional buyers. We certainly sold mortgages to institutional buyers, and also set up, like, one of the guys at our company was tasked with, did a great job, still runs that business on his own today. Cody Fowler set up to like do a note trading platform where we would sell in mortgages individually to individual note buyers.
Yeah.
Who were going to work it out, get it reperforming, whatever they were going to do.
Right.
So we certainly sold the mortgages in various ways like that.
And did the mortgages come later? You were at first were buying the REOs, and then it was like, okay, now the banks are like, hey, what about my NPLs? You want to buy those too?
Yeah. You got it.
Yeah. That by the way, it must have been a lot of fun, right? Because it's kind of crazy, right?
Yeah. It was, I mean, a whirlwind, but it was exhilarating. It was definitely a lot of fun. I learned a ton. I mean, you talk about going from the opposite of 6 years of consulting, where I'm almost like a brain for rent. Like, I was coming up with like all these awesome ideas, but then, never got to see any of them through. And I was like, oh, what happened to that one and that one? So to go from that to, basically helping to build and run this organization from soup to nuts was so much different. And the software development was awesome because I was never on my radar growing up or anything that I'd be in tech and I would lead software development. But the experience in consulting, where I would be doing all of this super complex financial modeling. So you got to do tables and lookups and databases and algorithms and all this stuff within Excel or other areas. So complex stuff there. But you had to synthesize it down to these beautiful decks, a couple charts, explain it, move this, and the numbers move, and whoa. And again, it's before smartphones and all that by far. That skill set to be able to handle the complexity and boil it down to elegance, man, that's what you need in every software
That's exactly right.
application out there.
That's
And
exactly
so
right.
when this company, we had one guy at the beginning who was like starting to write code to like start to do all this stuff and how can we hook the realtors in and blah, 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 blah. So then I helped take over and we built a, 8, 10, 12 person software development team that I was managing and architecting everything that they would do. So we had our accounting integrated with it and with and utilities. And so like every single person that they're turning utilities on and off, or the investors could log into a portal, see the deals they were invested in. Oh, I'm in this REO pool and this pool, and click in, and now I get to see all the assets. And here are the ones that have sold. Here are the ones that are pending. Here are the ones that are still active or they're in rehab. Here's what we projected they'd sell for. Here's what our costs had been for acquisition costs and rehab, like projected and actual. Like they could see it in real time with nightly updates. Sick. Awesome. But we had to build all that, right? And so it was great because I always felt like, okay, I might not exactly know where I'm going, but I could tell at every phase that, okay, I'm being given this opportunity to like learn this other skill set. Don't know why, but now 20 years later, I see all the pieces come together and it's like, that's amazing.
So what made you get out in 2013 from this company? Because there was a ton going on and the institutional buyers really had just started like 2011, 2012, and they were buying up these assets. And so what made you 2013? So what happened?
So it's a great question. The guys that were running the firm, and I was not an equity partner. I was supposed to be, but I was not. They couldn't see past the trade. They were, their model was buy, turn around, sell. That was all that they could really think about. We looked at some things as to, okay, well, is there a better long-term play in this and that now that the markets are really going to stabilize? For them, it was the short-term flip in and out.
Okay.
And so they weren't really capable of adapting. They started to get into commercial, started to buy some apartment buildings and this and that, and they had a fallout internally. And one guy bought two guys out, started running the company in a really unproductive, unhealthy way. I could tell this was no longer the place for me.
Wow.
And, so I waited till they closed this particular deal that they'd be on euphoric cloud 9 to tell them, by the way, it's time for me to go. And they said, great, see you later. I said, by the way, I've still got money in some of these deals. I want you to buy me out right now. Great, no problem. Gave me my cash. And I walked away. Over the ensuing year or whatever it was, I'm not really sure. I'd hear different things from different people that stayed or left, like the accounting department that all picked up and left because they had to report them to the authorities.
Oh boy.
The guy started getting in substance abuse with a couple of the team members that he brought on, and embezzlement and fraud with all their commercial stuff. And today he's literally in jail.
Oh my God. So this is like the American, this is, I don't want to say American, this is an American story, right? Like you're an entrepreneur.
The train off the tracks.
Right. This great idea. You hit this apex, everything's going great. And then all of a sudden the success gets to you and then we start going down. I mean, this is not a new movie, right? We've seen this before, unfortunately. Oh my God. Wow.
Literally reported to the authorities by
Internal.
former accounting team.
Yeah.
Who were then like in touch with them and they were monitoring and this and that. And the authorities took like years to like figure anything out or do anything or whatever. And he was, I don't exactly know. I think he was like caught and then blah, 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 and then let go and then started doing it again. And then the second time, is what I think is what I've been told is now what gave him like the real prison sentence.
Oh my God. Oh my God. Wow. Okay. I didn't see that coming.
No kidding.
I did not see where this was going because I'm like thinking to myself, I started lending in 2008, but in 2011, 2012, we got hired by a private equity fund and we bought and repaired and property managed almost 1,000 properties from in Texas because they were trying to acquire properties, REOs, right? And sell them to institute. They were a small, private equity fund that was going to sell to a bigger, larger institutional fund. And so I knew that was going on then. And what you guys were doing, I was like, that would be super easy for you guys to just morph into, you've had all the relationship, had all the contacts. Now, it got a little trickier because I think the institutional guys got smarter, or the smaller institution guys got smarter and said, the banks have to post these for foreclosure, right? Before they can own them. And so they started, I would go to the auctions, the first Tuesday of the month in Texas, I'd go to the auctions, I'd have $3 million in cashier's checks in my backpack. And we would be at multiple counties. We had teams of people and we'd be buying at the REO. So the banks, they actually never got to take them back. So before your group could get it. But that group, you guys were in the same, you could have figured this out and you could have been buying at the auctions and all the other stuff and then just turn around and sell them real fast. But obviously there was other stuff out of your control happening. Wow.
Yeah.
So did that lead you to Richer Values or are we there yet?
So when I left the company, when it became really clear that he was starting to run it in like this toxic way, I had no idea what I was going to do next. I just knew that this is not the place for me.
Yeah.
So there were several people that we had done business with that had invested in our deals or other things. And when they knew that I left, was like, okay, call that guy, et cetera. And so I wound up kind of consulting for and helping a number of other companies, and it wound up formulating into like a services company where now I had an entity that was like helping to provide various strategic services, sales elements, et cetera, started taking on some of my old sales team and so on and so forth. And so it's basically like a services company. And one of those services that we did was helping various REITs and institutional investors find, those needles in the haystack of all those auction forums, public auction, HUD homes on a nationwide basis. Most of those did not pencil. So how do you find the ones that are actually good? And so I was now starting this new service and building an underwriting team again offshore and all like with trying to do Excel and this and that and as like a bidding service. So then we bid on behalf of these various companies. And if we win, we get a fee and they give us our max bid. And if we won for less than their max bid, we'd share in the windfall. So 2014, that was going gangbusters. We had a couple months where we hit like 30 deals in a month for like a handful of clients or whatever. And so that was good cash flow for us. and looking to grow it. And just by word of mouth and whatnot, it kept growing in terms of the customer base. But the markets kept changing, kept getting more and more saturated and harder to get those deals. And so when you fast forward to 2017, we had 4 times the number of clients, and we were getting about 20% of the total win volume.
Yeah.
And so I had already been trying to figure out, how do you scale this? How do we systematize it more? It was still taking too many man hours to like do the underwriting on the deal. Like, what's an as is value? How much rehab do I think it's going to cost? What's ARV? Like, that's not like a 1 second thing. And so I finally said to myself, I mean, that's the word chutzpah, right? Like, when I look back, I'm like, what was I thinking? But I said to myself, I'm tired of this. Like, I think I could build myself a software. Give me the raw data. Give me the MLS data. And I think I could build a software that can do all this analytics and give me an idea of as is value and rehab costs and ARV, so I can do this more systematically and boom. So I started mapping that out analytically, like using my economics with regressions and all this stuff. And started, taking, a lot of my own cash and building Prototype. And Prototype started to function pretty good with like real MLS data. And started to go deeper, but now we're into like second to third half of 2017 where, man, we were starting to get below break even on the bidding service and some of the other stuff. But I have overhead. I've got people I got to pay for. And it was only going down. So I made a decision. I had to shut those business lines down. I let everybody go.
Oy.
And it just had me and development where I said, look, I don't know where the other stuff's going to go, but I think there might be something here with this analytical stuff. So I kept working on the technology and the modeling and the software interface that did kind of beta stuff in 2018 and launched Future Values at the beginning of 2019.
Oh my gosh. So, and this is jumping ahead a little because I am curious. How many clients do you have now? Like, I'm trying to figure out where I met you. Rodney, I don't even know where we met you. But it had to have been, I mean, early. Really
It was
early.
probably me cold calling you.
It could have been. Because I think I was done with conferences at that time. So I might have been done with conferences, or maybe Eric met you at a conference or something like that. I'm trying to
I
think.
think I met you before Eric.
Gosh.
I think I met Eric at your office.
Well, I definitely remember you coming to the office. 100% remember you coming to the office. All right, how many clients you got now?
Maybe around about 500 lenders and institutions around the country.
That's pretty awesome. That's pretty awesome. Yeah, because I can say I knew you went, right? I didn't know the whole background story, by the way. Phenomenal. Like this is why I want to talk to you, right? Like, I love listening to the stories. Like, that was crazy. Like, you could write a book. The twists and turns.
Well, imagine
Your deal.
2019, let's say.
Yeah. Oh, and yeah, then we didn't even get to what's coming next. Even crazier.
5 kids. My wife, thank God she runs the home. Doesn't work. I'm the breadwinner.
Yeah.
With no bread.
Right.
Seeing the, what's left in our accounts go down, down, down every month. Like, I just knew was probably going to get to literally zero. And pounding the phones to try to get customers just to use the software. We weren't doing their reports at that point.
I know. I remember.
And I can't tell you, most people don't talk about it. But the amount of stress and just mental pressure of entrepreneurship, people don't talk about it. But those couple years were some of the hardest that I've had. I've got 5 kids. I just want them to, be able to have opportunity and, you know, I don't want them to be, you know, embarrassed about their father or know that anything's wrong or, it was super tough go for those couple years. And I'm so thankful every single day, that we are where we are today. I mean, I still want to grow 10 times more and 10 times more. And I think we can, but, thank God. I mean, you know, we're significantly, you know, more stable and profitable today compared to, you know,
Yeah, because
those are some tough times.
right. But I mean, Rodney, that is the life of an entrepreneur, right? You don't get to start where it's a success. Like you're creating something out of nothing, and so you're going to have nothing for a while. This is always the funny part. People like I've been doing this lending for 17 years, right? Oh, you know, the size you're at this day, da, 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 da. I'm like, yeah, but in the beginning, we didn't make any money. Nothing. Zero. I was paying my investors. I was paying my employees. I had a wife that worked. I was bringing home this much, right? I mean, that is the life. And by the way, you have no idea if it's going to work. You have to be a bit of a dreamer, right? We're a little bit Don Quixote, right? We're tilting at windmills a little bit, but we're like, I don't know about you. I feel it's got to be the same thing. Like in my head, I was like, you know, I'm doing 5 loans a month. You know, if I got to 10 loans a month, we could do that. If we got to 20 loans a month, maybe if we did 50 loans, I mean, God, if we did 100, I mean, that'd be crazy, right? But
And that's what keeps you going.
yes, but you
It's
got,
that dream where you're like, okay, if I just get this.
yes. Yeah. Cause now, like, look, when I first met with you, you didn't have 5 clients, right? I mean, it was
I don't remember, but
Or-
we were early.
it was early. And now that you think you have 500 clients and that, you know, I remember talking to you early on though, that you were like, hey, this is not just for private lender stuff like this, the banks, you know, I mean, there's lots of different people that can use, I mean, you had the vision, you had the dream, and you have to have that. Whether anybody believes you or not, right? You have to believe that this is a possibility or why would you be doing it? Right.
Absolutely.
And so you got to
But
have,
and I totally remember and like never would have said it at the time, but like, oh man, when you guys came in and signed up and I think maybe started paying like $800 a month or
Yeah.
whatever, it like tripled my revenue or whatever it was, or, you know, make whatever. And when it was like, oh, thank God. Like, cause you know, again, I'm paying my tech team, whatever, like I had like nothing.
Yeah.
So like any amount of money coming in, and I had to like act like, oh yeah, no, it's no problem. Like, you know, oh yeah, that's drop in the bucket. And I'm like, oh, it's our biggest client. Like, this is amazing.
right. No, I mean, you gotta play the game a little bit, right? Because like no one wants to hire you if they think that you're about to go under, right? No, nobody wants to do that. But you know, like you believed in your product, you're like, I know you guys can use this, right? And it's so funny now that like in the last 12 months, I've talked to a ton of different lenders, right? I've tried to get to know different lenders and what they're doing, and like it's so amazing, Roddy. You're a common occurrence. You're a common discussion that we all have. And it's a testament to your will and work ethic that I can talk to all these different lenders throughout the country and every single one knows who you are, right? And almost all of them are using you in some form or fashion, right? Because people use your company in different ways. It's not all the same, right? Like some people use it for underwriting purposes, right? Some people for direct valuation purposes, so they can send to their bank and they can, you know, they can pledge collateral and they can get leverage, right? I mean, there's so many different ways that your product can be used, but you had to power that sucker through, man, because that product didn't exist, right?
No.
Right? There was appraisals, there was BPOs, right? And realtors running CMAs, right? Comparative market analysis. That's it. But nobody had an ARV, right? And that's what in our space we were looking for. And now the banks are in our business because they're doing note-on-note financing. So they need to know that too. I mean, it's pretty amazing. And by the way, I do got to ask this though. Were you freaking out in 2020, right? We were all like, are any of these valuations going to be worth anything? Because your product, and I think every appraisal, is a look backwards in time. So COVID hits, and I remember sitting there thinking to myself, should I even do another loan? because my loan valuations are based on looking at time. We're about to enter a period where our country hasn't seen for 100 years. So I was like, I don't even know if I should be doing this. I mean, what were you thinking? Like, were you thinking these valuations are going to be, how is anyone going to value what the hell's going on right now?
Yeah, it's a good question. And the honest answer is the valuation piece is the one thing I was not.
Interesting.
At that point, we had gotten the software and the analytics to such a level that I knew it adapts. We have other leading indicators or market demand and other stuff that give forward trajectory to figure out, like, well, what is it softening? Is it this? Is it that? The valuations I wasn't worried about. Now, but could there be a massive economic shift and hit, if the world stays closed for all this time? And I thought the whole closure thing, well, I'm not going to go there, whatever.
Yeah.
But could have some major macro shocks. And it did in certain geographies that were really hit, like Vegas, by hospitality and other stuff.
Right.
But meanwhile, I was also watching the other, macro real estate, indicators and this and that. And so actually valuations, I was not worried about at all. I felt that actually we were better equipped than anybody else. And when we did our backtesting studies, that actually proved that. It was just more of the general, business entrepreneurship. But what was cool was, man, to be like a guy pounding the phone, acting like I got this whole team behind me and whatever, and I had my tech team, but that was it, right? In 2018, 2019, not so receptive. And if I had asked somebody, hey, can we do a video call? They would have looked at me like, who is this wacko? What video call? I'm not going to get on a video with you? That's a little weird, buddy. And the interesting thing was when COVID hit, now the things that I would do with my tech team and video and this and that, now all of a sudden it's okay, and normalized it. And it actually made sales for a tiny little entrepreneur 1,000 times. It was an open playing field.
Yes.
Now anybody would talk to me.
Yes. Way more
This
efficient.
was somebody going to talk to, and it wasn't weird getting on a video. So that actually was interesting. It actually helped accelerate our our growth.
Yeah.
Because we got better reception on the sales side.
I believe it because, necessity is the mother of invention, right? And so just because you might have been ahead of times, wanting to do video calls or something like that, the rest of the world was not there yet. But now all of a sudden we have no choice, but we all want to still conduct business. We all still want to do something like, we don't just want to sit in our house. I mean, that's not, you can't do that. So that doesn't surprise me at all. And I do think, look, it was an opportune time. No one is a tragedy, it's terrible, right? It's all bad, blah, 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 blah. But a lot of interesting things came out of it, right? I mean, Zoom, Teams, those type of things. The fact that we learned that real estate is, it's forever, right? It's people are going to buy and trade homes no matter what is going on in the world, right? Things go down, that's opportunity, right? Things go up, oh, it's a good time to buy a house. Yeah, I mean, it's just unbelievable how resilient the real estate market is, right? The stuff that we've gone through in the last 17 years that I've been doing this, right? Total financial market crash, right? One of the largest banking institutions, or private equity firms gone. AIG should have gone under, right? They got bailed out. The largest insurance company got bailed out by the U.S. government, right? Should have gone under. We see that. Worldwide pandemic, all that. I don't know about you, but I had more growth in 2020 through 2022 than I ever had. It was nuts. And that was after, I don't know about you, but in March, my investors, so my fund at that time was $65 million of capital, okay? In a 10-day period, 10% of the people asked for their money back, right? Yeah, we had to run on the bank. And because nobody knew what was going to go on. I didn't blame anybody. Like, I was like, yeah, you know, as soon as these loans pay off, I'll pay you back. I pay everybody their money in 30 days. And then 60 to 90 days later, I got all it back. And then it just started going. So, I mean, it's a fascinating time. And now we're in this weird, I'm curious what your thoughts are. We're in this weird market now where every day we wake up and depending on what our administration tweets, the market's up, the market's down, interest rates up, interest rate down. Like, I'm just begging for, I just want a little consistency. Just give me a little consistency. I can figure it out. This up and down stuff, you know, it makes our lives a little more difficult. I don't know what you guys are seeing.
Yeah. I mean, we look at more of the macro elements, like when it comes to that, which is the big drivers are inventory levels, housing needs, and then yes, rates and you know, availability of mortgages, but we've seen that interest and true demand is less sensitive to interest rates than people would have thought.
Right, because
Now, it just might mean that they have to buy a less expensive home
that's exactly right.
with a lower payment.
That's right. But it's acceptance, right? We have to have acceptance that this is the norm, because you and I don't remember, but our parents, when they probably bought their first house, it was 12, 13% was their mortgage rate or higher. And so we've been preaching to everybody that, you know, we live in this fantasy world of 2.5% to 4% mortgage rates, right? That's fantasy world, right? So if we're at 6.5% to 7%, that's reality. And we all just have to, there has to be acceptance that quit waiting to see if the rates are going to go down to buy a house. You want to buy a house, right? And I do think we have a shortage of homes, right? And that was caused, I think, by the financial crisis, right? And it's very localized, so every market's a little bit different. But you do have a shortage of homes. So if you want to buy a house, don't wait for the rate to, I'm going to wait. No, just buy a little less house, right? Or
However you can afford.
buy what you can afford. Or what I've always told people is make an offer. Just because they're listing it for $500,000, if you can't afford $500,000, you can afford $425,000. Offer $425,000. You don't know if they're going to take it or not. Offer for it. I don't want to insult them. Drives me insane with people. I'm like, you know, we own a bunch of properties. I'm like, make me an offer. I'm like, I'll tell you yes or no, or I'll negotiate with you. It's not a big deal. My little pet peeve on buying and selling homes and everything like that. But Rodney, this has been fascinating. I have really, really enjoyed talking. I did not know your background story on stuff. Crazy. But Michael, my producer here, has been giving me the, hey, you hit over the hour mark. But I've really enjoyed this. I've really, really enjoyed talking to you. And I do want you to come back, and I want to talk again, because I want to talk more specifics about today's market and what you think about today's market and where Richer Values is going next, right? Because, I mean, you guys are always, you're a tech company now, right? You're a tech guy. You might not have thought you'd be a tech guy, but you're a tech guy. And so you got to get ahead. Like, what's next? What's the next predictive thing? What is the next tool that you're going to give to make lenders better at their job, right? I mean, I think that's something I want to talk about. But thank you so much for coming. This has been fascinating. And I'm excited that you are where you are now. It's a cool journey, man.
Yeah. Thanks for having me. This is great. Always a pleasure, and would love to do it again.
Yeah. Awesome. All right. Thank you, buddy.
Call up Longhorn, told them let's make it rain. They said, boy, you know we got you, gonna do your thing.